Alright, the big news today. Bank of Canada just cut the key interest rate by 25 basis points, bringing it down from 2.75 to 2.5%. Yes, the rate cut we have all been waiting for has finally happened. Okay, now let's break it down what it means for you, your mortgage, your investments, and the Canadian economy without the boring stuff. So why did they pull the trigger? Well, the Canadian economy was just looking a bit meh. We literally shrunk 1.6% last quarter annualized. And that's not just slowing growth, that's contraction. And in the trade mess with US tariffs, the exports got slammed. For jobs, it was a brutal summer as well. Unemployment right now sits at 7.1%, which is highest in nearly a decade, just outside of COVID times. Yes, a lot of it was lost out of the temporary workers, but still, it does have an overall impact on the economy. On the flip side, inflation has been cooling off. Headline CPI in August was 1.9%, which is below the bank's 2% forecast. And the core inflation measures, trim and median, are hovering around 3 and 3.1%, which is high but still reasonable. In other words, weak growth and inflation under check. That's the perfect recipe for a rate cut. And honestly, everyone saw this coming, except RBC. RBC was the only big bank saying no, they were going to hold back at 2.75%. But BMO, TD, CIBC, Scotia, everyone was shouting for a rate cut, and they were right. Markets had it priced too. The futures are already showing a 90 to 95% probability of a rate cut after last week's inflation numbers. So, if you're surprised today, hope you wake up and smell the coffee now. Okay, now let's get personal. What does this mean for you? If you've got a variable rate mortgage, your payments are going to be lighter from now on. Of course, not life-changing, but yeah, every penny counts. If you're a first-time buyer sitting on the sidelines, this could mean a change in the mindset now. I mean, real estate is doing bad, specifically in Ontario, and I still believe it's going to be bad. But you'll start to see off those bummed up people here and then now. For businesses, this is meant to be a little boost. Cheaper loans means it's easier to expand, hire, and invest. But let's be real, if the demand is weak, the companies are not rushing to borrow just because the rates drop the notch. The bigger play here is psychology. Bank of Canada is saying, we have got your back and we are willing to support growth. It's more about confidence and less about cash. Banks are optimistic for some more rate cuts this year itself, except for RBC again. Bottom line, rates are down, economy is weak, inflation is cooler, and Bank of Canada just pressed the stimulus button. But how far they'll go? That's the million-dollar question. Lastly, my name is Nipun. I'm practicing CPA and a mortgage agent. If you're looking for one, there's a form in the description. Just fill it out and we'll get in touch.